Good afternoon, all. This is Raghu here. Hope you guys had a good trading day. Today was a range bound day with the range getting broken at the end of the day, I think in last 30 minutes. However, I was giving the regular calls in our Telegram channel and I was alerting people who was trading Nifty. So basically, this is Raghu and I trade only Nifty because I'm a working professional and I had shared all my levels in the previous video and I had informed you that we have to be very cautious because we are in a sideways market and market will not give you the range. However, how did my trade go today? I mean, it's pretty bad, guys, very bad. I made some peanuts, but it was really bad. So there was around overall 5 trades, which is kind of over trading. So what happened was today early morning, I had a meeting. While in the meeting, I tried entering P. My assumption was just to show you, market is going down. Market went down. So I expected market to stay below S1, but in the first 5 minutes itself, the pullback ate more than 10 points and gave me a hit of 10,000 rupees later on, which I recovered with a CE trade. Probably I could have made 10K today, but the market was choppy and I just exited after recovering my loss. So that is my trading for the day and how we could have traded Nifty today. So I spotted the moves. Were you able to spot the moves? That's the beauty of Nifty. Nifty, I keep telling you, it's the GPRS of the market. Now, thumb rule, S1, R1, everything is pivot. Previous day low, previous day high, weekly low. These are all pivots. The meaning of pivots is turning point. Now, this morning, there was a little bit gap down, market went down and we saw a lot of buying here. Now in this buying area, I had given you the levels. We had a gap here. I'll show you. I had marked these levels for you yesterday. This was the gap and this was the previous support area. So usually I share these levels. All right. So why I took the risk? I mean, early morning market will be volatile and I thought I'll take the risk for big reward, but the risk did not pay out and I took the hit. That's how trading works. Now, usually people wait for first 15-30 minutes to see the direction and trade. Sometimes I trade exclusively Nifty and sometimes I tend to get overconfident and take the trades within first 5 minutes. Anyway, that is my trading style. But if you have seen these levels, morning, none of you would have taken this trade. Rather than that, after seeing the bounce in first 15 minutes and closing above this level, you would have gone long. Now, how does that reflect in pivot? Okay, this is the first 5 minutes candle, S1 pivot. So it is taking support above S1. So you know that any trade should be taken only on 5 minutes closing basis below S1 pivot. What happened with the next candle? The next candle closed above the first 5 minutes candle, right? So we still had previous day low as a resistance. Now, once this resistance was broken with the pin bar going up, this was a reversal pin bar and this was again a reversal pin bar. This indicated a pause in the downside. See this pin bar with the downtrend, usually market would have gone down, but what you saw here, you had another reversal pin bar indicating the downside is halted. So above previous day low, what should be the target in pivots? Simple, it should be CPR. It does not matter whether the lower bottom circuit, central pivot or the top circuit, it's a CPR. Usually if I am trading full time, after looking at this test, my stop loss will be below this candle and I would have entered here to go here, right? And also see this one, this candle was a wick to body engulfing candle, but my trade would be after this pause itself. I would have taken a trade here. Maybe this would have come down to test the level. Still my stop loss would be below this pin bar or this pin bar. Now here Whom does the lower TC belongs to? What happened yesterday? If you have seen my yesterday's video, you would have taken short here. Again, I informed folks, this is a selling area. Now, mind it that in this central CPR, we have daily 20-day moving average and hourly 200 moving average. Everything is between these CPR. Now, usually while doing an analysis, I mark these levels on my chart. If you want, you can see here. Right, or do you see here? Let me remove the Bollinger Band. Just open this one. What do you see? Daily 200 MA, daily 20 MA. What are these levels? This is the, well, I'll come to that. This is the level, the gap filling level, which I have marked here. So usually why I mark them here is, although you are following the pivot, the previous turning point, see here, this was a small gap. From here till here is a gap. This gap will always be filled, right? So I had marked this gap, and this is nothing but central pivot range, right? This is the central pivot range. Virgin CPR. Have you heard about Virgin CPR? So if you have gone through my video on pivots, you would understand, and you can Google as well. The Virgin CPRs are the level where the central CPR has not been tested by that particular day's candle. Market gap down, came down, without filling or testing the CPR, market went up. So the idea of this Virgin CPR, as per secret of pivot boss, is after few days, within few days. So there's a probability of 85% chances that the Virgin CPR level will be tested. And if price is coming from the top, Virgin CPR will always act as a support. If it is coming from the bottom, it will act as resistance. Suppose this Virgin CPR was broken early in the morning, then definitely we could have taken little extra risk and carried our trades because the support was broken. Now see where the market stopped. I had given this Virgin CPR level at 9:05 a.m. in our Telegram channel, and that's exactly where market stopped. Now coming back to this, so we had one trade here. If you wanted to take the counter trade, keeping stop loss below S1 pivot and targeting central CPR. So usually the trade was here, okay, above previous day low, because here you don't have much risk to reward from here till here. Now you know what is the ongoing trend. The moment you saw a red candle breaking the lower bottom circuit, the stop loss should have been above this red candle or above CPR, but CPR was pretty wide. You can keep the stop loss near central CPR because you can see some price action here. So near central CPR, if market would have reversed, it would have taken a resistance here or within the top circuit, and then it would have come down. That is how you need to analyze the stop loss, not some imaginary numbers. You need to see the price action on the left hand side. Keep that as the cushion so that you don't incur losses. So what happened here? Market went down, came. Now see this one, after pulling back, this was a inside bar, but this inside bar is not forming near any pivots, but still I'm just showing you how you could read the market moves with pivot and price action. This inside bar was an indication that market is going down. So market came down, but this S1 was acting a pretty strong support. Yes, market was very choppy, but here you had another counter trade. Reason being, what is this? You have S1 support and you have a double bottom. See here, do you see the W? Now near this double bottom, what are you seeing here? You're seeing an engulfing candle. I was busy here, I could not alert the folks, but by the time I spotted, market had gone up, and when I came out, I took a trade not near the pivot but somewhere here with this green candle, and within the next candle I made around 8 points with 20 lots and recovered my money and closed the trade. Now why I took in between trade, I mean, this needs experience. Now if you add 20 DMA, okay, this is the Bollinger Band midpoint, prices were about 20 DMA, and you had 1 2 3, I mean back to back, three green candles, what you call white soldiers, whatever it is. This double top was broken with this candle. So we had one red candle. Usually in a strong trend, if bulls are strong, so within one, we call it as one leg pullback, the next leg should be closing above it. Now this is something which I learned by Albrook's price action. If you get time, you can read Mr. Albrook's. Albrook's is one of the modern giant in price action trading. Professionally, he is an ophthalmologist. He's a doctor. He's a US trader. But you can read it. The book is a little complex, but if you really pay attention and understand, so you will really understand trading. But anyway, that is your choice. Usually you can stick to Pivot Secret of Pivot Boss by Frank Ochoa. That is more than enough. I just wanted to show you where I took the trade. So you have a double bottom, you have a double bottom pattern. 65% of the time double bottom will not be broken in the first attempt. Then you have an engulfing candle. So you had a small scalping opportunity. Now, after this, double top was broken. Either you can enter here taking risk because your risk is very small. Suppose if you entered here, the risk is big. Then what do you understand by S1 pivot and engulfing candle? So you have to take the risk where you have a minimal stop loss. Then here, yes, market again formed a double top here. This red candle closing below was your sign to go short, because after this pullback, market was giving you a solid signal to go short. But however, market was very choppy. It was going sideways. Suppose if you have observed, we had a defined range. Okay, this was the range for today. So where is the trade? Below S1 period. Agree, you have a big wick here, but the second bottom was formed here. So below this, most of the times, all the traders who are waiting on the sideline for breakout trade would have entered here and entered. So I had called out here as well to avoid trading in this range and allow market to close below S1. This one came very close and then pulled back. The next candle closing below S1 was the sign. 18,000 PE from till here gave around 18 points, 97 to 115. And in this pullback, the price moved to 105. If you are a price action trader, you know that even this sharp pullback below S1, this is your stop loss. So you could still take the risk. And from till here, it gave another 25 points. So if you're a smart and super smart trader, probably you could have picked around 30 points in the last 30 minutes. But as I had done with my number of trades, I did not trade. And where did the price took support? The price took support near Virgin CPR. Now let's quickly check how will tomorrow fare out. I'm going to close all these Bollinger Bands. Tomorrow CPR, yes. All right, so we have two back-to-back descending CPRs. So we know the trend is your friend and trend is down. So market last 3 days going up, coming down, going up, coming down. It's almost identical, forming double tops, or double bottoms or double bottoms, but double tops. We are in a downtrend, so you have to think that market can go down tomorrow. But has we broken out of the intraday range? What is our range here? So we try to break out of this range. So let's keep this one. We'll take the low as well, where we see a lot of buying. Okay, market is acting as per the range trading. Like today also, this is very important, guys. Today I wanted to show you. So if you are in a range trading, so to form a range or to spot a range, it may take 1-2 hours time. But once you spot the high and low of the day, so you need to consider with the market moves how to trade the range. In the range, we don't have trend. It is always sell at the top, buy at the bottom. This is how range trading is done, and that is exactly what you're witnessing here. All the big players or smart money, DII, FIH, the way they do is they buy at the low of the range, sell at the top of the range. But still, I had informed you yesterday that we don't have a clear, well-defined range. So within this, we have a lot of highs and bottoms. So when we narrow down this, where is our next range bottom? The next range bottom is here. Mark this level, guys. 17,798 is the next range bottom. So tomorrow, if there is a gap down, because tomorrow is expiry. So in all sense, if markets here, this is also a resistance. You can catch the resistance in a lot of different way by breaking down the time frames, higher time frame or lower time frame, because this was the gap filling. This is where the gap has filled, and also the virgin CPR level where market is currently taking support. But if it breaks the low of today, then anticipate market has all potential to go and test 17,798. Will it happen tomorrow itself? Maybe not. It can first try to 17,844 and then go and test 17,798. What are the levels? If market sustains below tomorrow's low, the first target should be 17,844. The second should be 17,798. We are pure intraday traders, so having levels on shorter time frame is very important. Now this is crucial. You can see RSI is in between, it's neutral. That's the reason we are not seeing smooth move in the trades. Watch this one, central pivot. A lot of times market has tried to close below the daily central pivot but has bounced back. Here twice it tried to break and then we saw bounce back. This is the daily time frame. Again it took support and central pivot, bounce back. Now this is a double top for me. So any up move for positional should be 18,200 above, not 18,200 above. Okay. Now today also we have seen a negative pin bar closing below daily central pivot. And maybe if it is low, I told you 17,795, right? What is the level I gave here? Yeah, 17,842. Okay, if you follow the daily time frame candle, yes, it looks that it can come down to 17,800, the same level which I told you here, 17,798. So in between we have a small target on hourly time frame. If you further break it, you will be able to see it clearly. See, market is trying to take support here, trying to take support here. Watch only the line. If you want, I can remove the CPR. Around this line, the first line, see there's one pin bar here. Market comes down, goes up around this level. Okay, this level is crucial where it's taking support. So the first target should be 17,846. Below that is 17,800. This is how you have to trade. But however, as a pivot trader, you also need to know where is your S1 and where is your R1. So within the range, you know, summary is market is becoming weaker and weaker. We have a descending CPR indicating downtrend, and your R1, see where S1 is 17,844. Below S1 is where smart money enters and market can go down below. So if you watch my videos, you know I consider R1, S1, previous day high, previous day low as a crucial levels where you can anticipate trending moves. Now this is your tomorrow's R1 and this is your tomorrow's high. So we have to wait for tomorrow's high to be broken for any up move. But S1 is here. If there is any gap down or below S1, anticipate strong move. Keep your stop loss above S1 and enter. And the way you need to trade is, okay, you enter, market closes above 5 minutes above S1, exit. 5 minutes, maybe tomorrow is expiry, you might lose around 10-15 points. Okay, that's how the trading has been done. That is what stop loss is. But if it again breaks S1, enter short again, recover your loss of money. So it's the catch is, are you taking the risk at the right moment? So today, see this, today is our, this is our today's chart. So where was your trade? If you really observe, one trade here, one trade here, second trade here, and third trade here. And suppose if you want to avoid, this was not clear to CPR. So let's observe that I don't want to take risk here, but it's a double top. By practice, I know as a price action, double tops will not be broken in first attempt. So even if you excuse that, you had 3 trades, 4 trades, and watch all these levels. Where is your stop loss? Your stop loss is few points below S1 on a 5 minutes closing basis, above S1, above this candle near the CPR. Where are you taking the trades? The trades are taken near the pivots. You might, due to fear, exit in between. That's okay until you master. The target should be pivot to pivot. But the catch is, are you taking the trades near the levels where risk is minimal? Suppose you're taking here, suppose you're taking here. What is your risk? Where do you put your stop loss? Here, here. The stop loss is very far away. So I just wanted to show you how to take the trades so that you have the minimal risk. And please do not trade if you don't accept stop loss. Every trade is a risk. And without understanding the risk and accepting the loss mentally, you won't be able to overcome your fear. Now we can have a trading psychology some other day. So let's wrap up. If you want to wrap up, what kind of CPR we have? It's a normal CPR. So we might see some moves like range bound day today. It's not a wide CPR where we anticipate a tighter ranges. So yeah, market is weak, and please do consider the levels which are shown here, 17,844 and 17,800 as crucial levels. If you want the price action levels, these are the price action levels. So top side, this entire range will act as strong support. Gap is filled, remove this, bring it here. So this will become here, Victor body is here, new support. So below this, what levels I have already plotted? 17,800. What is the level I drew just now for you guys? 17,800. So in all the time frame, all the price action, everything is indicating the levels. So these levels are pretty accurate. Be subjective, don't be objective. Watch the price action and trade. Thank you all. Hope you learned something new. Have a good day.